Welcome to The Explainer. Today, we're going to talk about a totally different way to think about investing. So, forget about hunting for those quick, stressful profits. We're going to learn how to cultivate a financial forest, a strategy that trades anxiety for patient, sustainable growth that, believe me, will take care of you in the long run. So let's start with a really important question you need to ask yourself. In the stock market, are you a hunter or are you a gardener? I mean, are you out there anxiously chasing after fast-moving targets, or are you patiently planting seeds that you know are going to grow into something that'll last a lifetime? And this really is a tale of two mindsets. On the left, you've got the hunter. They're driven by anxiety, right? Always chasing the next big win, always worried they're going to miss out. But on the right, you see the gardener. They're operating from a place of stability, calmly cultivating assets that produce a steady, reliable harvest year after year. Okay, so what exactly is this gardener's philosophy? Well, it's a really powerful strategy called the zero-cost forest. And the goal here isn't to guess which way prices are headed. The goal is to own a thriving ecosystem of assets that just works for you. The core idea is actually pretty simple, but it is profound. You use the dividends from your investments, think of them as fruit from your trees, to just buy more. You keep doing that until you've earned back your entire initial investment. And at that point, every single asset you hold is essentially free. It's become a self-sustaining part of your financial forest. You see how this completely changes your perspective? You stop asking yourself, hey, is the market going to go up tomorrow? And you start asking, how many fruit-bearing assets do I own today? Your focus totally shifts from prediction, which is a loser's game, to accumulation. So, you're probably wondering, how do I build this forest? Well, it's not some complex, confusing system. It's actually a really straightforward three-step process. This is your blueprint for transforming yourself from that anxious hunter into a patient, prosperous gardener. Think about it like this. First, you've got to select the right saplings for your portfolio. Then, you use the seeds from your very first harvest to plant more. And finally, you get to a point where your initial investment has been completely recovered. That's when you achieve total psychological freedom. All right, for step one, you don't want to bet everything on a single tree. That's way too risky. Instead, you plant a diversified forest using what are called exchange-traded funds, or ETFs. A great model could look something like this, maybe 40% in core ETFs for broad market growth, another 40% in high-dividend ETFs for that consistent income stream, and then 20% in growth ETFs to give you that extra boost. Now, this is absolutely the crucial point for step two. It's all about a mindset shift. The dividends you receive are not spending money. You have to see them as seeds for future growth. Every single dividend check is an opportunity to plant another sapling in your forest. This is the engine of compounding, and honestly, it's the most critical action in this whole strategy. And finally, we get to step three, which is the grand payoff. The moment when your assets have paid you back your entire initial investment. Well, every share you own from that point forward feels like pure profit. This is an incredible mental shift. It completely liberates you from the fear of market swings. So how quickly can this forest actually grow? Let's take a look at a 10-year projection. We'll assume an initial investment and some steady monthly contributions. You might be really surprised at how quickly the magic of compounding really starts to take effect. Okay, look at this. After just 3 years, the power of compounding is already doing its thing. With a total principal of $1.72 million invested, your assets have already grown to $1.93 million. Your forest is already starting to bear some pretty significant fruit. Now, let's jump ahead to year 7. This is where you hit a really critical milestone. Your total assets have swelled to over $3.6 million. But here's the more important part. The cumulative dividends you've collected are now getting close to the amount of your entire first year's principal. You are officially on the path to what I'd call psychological invincibility. And then, after a decade, the growth has just accelerated dramatically. Your total principal invested is $3.4 million, but your forest is now worth $5.28 million. And what's truly amazing, it's now producing over $300,000 in passive income every single year. Your little seeds have now grown into a thriving, self-sustaining financial ecosystem. This table really just lays it all out. Take a moment and look at the column for total assets versus the one for principal. See that gap between them? Your net growth? It starts small, but then it just explodes in the later years. And the reason that gap widens so dramatically is because your growth isn't just happening on your principal anymore, it's happening on your previous growth too. That, my friends, is the classic hockey stick effect of compounding in action. You know, beyond all these impressive numbers, the single biggest benefit of this whole strategy might just be the incredible peace of mind it creates. It's not just about building wealth, it's about preserving your sanity in what can be a really volatile market. So why does this matter so much? Well, because when you're no longer afraid of losing your initial capital, your behavior completely changes. A market crash stops being this terrifying, world-ending event, and it just starts to feel like a storm passing over your free forest. You can hold on, you can stick to your plan, and you can avoid the panic selling that destroys so many investors. Of course, even a magical financial forest doesn't just manage itself completely. It does require a little bit of stewardship to make sure it stays healthy and productive for the long haul. The real key to long-term success is to reframe how you think about market downturns. Instead of seeing it as a crisis, you start to see it as an opportunity, a massive sale on seeds. It's literally the best time to expand your forest, and you get to do it at a discount. And this quote really just summarizes the entire philosophy, doesn't it? It's about letting time, not timing, be your greatest ally. So the final question isn't about finding the next hot stock. It's much simpler. Are you ready to plant your first tree?